Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how are you?
Oh, I'm doing okay. I've got some sinus pressure. This warm weather this warm, dry weather, let me put it that way, is really impacting my sinuses. So, it's been a slow going morning so far, and you can probably tell I'm a little congested, but
Just a little bit, but it's not bad.
yeah, our viewers probably didn't come here to listen to me talk about my mucus, but I do have a positive. So last night, the Appleton City, my hometown, the women's basketball team went to Pilot Grove just down the road, and they won. So they're off to the Elite Eight. So big
There you
deal for a
go.
small town. You forget a little bit of just the excitement and energy that goes into schools, small schools that don't make it to this level very often. So
Well,
it was fun.
congratulations to them, and hopefully the run continues.
That's
Uh,
right.
Talking about some runs continuing, got to give a rundown recap of what we're seeing in the markets right now. Continued losses are widespread, but we do see some gains mixed in there. So looking at the nearby corn contract for March down 13 cents at 407. December 24 corn down 5 cents at 457. March soybeans are down 49 cents, 1136. November soybeans down 30 cents at 1129. Soybean oil on a cents per pound basis for March down 0.97 cents at 45.02. Soybean meal by the short ton is down $15.60 at $334.40. And then the wheat, some slight gains on the week there for the March crop or March contract, up 11 cents at 577. Same for July, up 11 cents at 577. And then the crude oil prices for April down 44 cents a barrel at 77.54. So Ben, continuing to see these losses in the corn and soybean sectors, but some slight gains in wheat. Where are we going? Where do we go from here?
Well, so the interesting one there is that March corn, which granted, March corn has now shifted into May corn. That as of this week, that becomes our May contract. But that March contract finished on a little bit of a rally Monday, a small one, but a little bit of a rally on Monday after closing on Friday below $4. You want to talk about a nail biter? I spent probably a good 20 minutes that I shouldn't have, but I was just sitting there watching the ticker change, curious to see if the market was going to close below $4, and it did just barely. And that kind of drew some attention, I think, of folks thinking, "Wow, this market has really deteriorated," and certainly, it's caused a lot of pain and pressure for producers that didn't sell a whole lot of the 2023 corn. That crop now looks a lot, less profitable than it did just a couple of months ago.
Well, and Ben, you were kind of giving a live play-by-play on Twitter as that was happening, and you can kind of, I guess, expect to understand what reactions would be. Just talking about maybe
Um,
that lost opportunity to maybe capture a better rate of profit or at least profit at all. But as we look at the situation now for farmers that might have held on to that crop, what advice do you have, or any any types of things that they can be thinking about right now?
Yeah, so it's a real unfortunate situation just from the standpoint that we've deteriorated so much since harvest, which is abnormal, right? Like a lot of people store their grain. It's a wait and see approach. Store it, sell it in the spring when you got time to move grain. This is a year that did not work. And in fact, it was, even if you sold grain and bought back a call when you sold grain to kind of protect against some of the upside, those calls, lost some, like you would have had the downside loss of losing, whatever the premium was that you had. And so that lost and cut into some of your revenue there too, your profit there as well. And, it just, if you've got grain in the bin and you need to make purchases for inputs for this year, it's hard to justify taking out a loan, operating loan at 8%, even if you've got, cash in the or grain in the bin and you're like, maybe eventually if I hold it long enough, it'll be better. Keep in mind those storage costs are going to continue to eat against you, and taking out an operating note at 8% becomes very expensive.
Well, and that's just the thing, looking at that 8% interest on that, you know, we're gonna have to see a pretty strong rebound to make that loan worthwhile. Going back to what you're saying. So looking at the trend, and this has been a pretty steady drop for the last several months, it makes it hard to think that we're going to see a sharp turnaround, especially when there's certain fundamentals maybe out there that the market seems to be ignoring. But looking at things like South American production and some of the drawbacks that they've seen as of late. But Ben, when you see that hit the market and the market not really respond to try and switch some of these into positive momentum, what does that tell you?
Well, I think some of this has already been baked in, and there's just a lot of cash corn left to be sold that's going to come into the market on any given rally and really kind of prevent a major rally coming. And so until we work through those supplies, get maybe a little bit later in the spring, and we work through those supplies, it's going to be hard for the market to rally substantially.
Well, and really, it seems like the market's just kind of waiting for something big to trade on, potentially, but there's not really big ticket news items that are hitting the market as of right now. When we look at the export inspections for grain and oilseeds, we're seeing some mixed and bullish, items for the week, but it's still not, pushing those prices like we said higher. So looking at things like export inspections. What are you expecting to see moving forward? Do you think that's going to stay kind of on par with what we've been seeing as of late?
Sure. So, to your point about we don't really have anything that's going to change this, I would argue that our next major, opportunity to change this market sentiment comes at the end of March when farmers, provide their intentions of what they're going to plant. At today's prices and today's profitability, it certainly points heavily to soybeans. And so if we come in with if we come in with a large soybean acreage number and a smaller corn acreage number, that changes some of these fundamentals, but neither crop needs the added acres. So that to me is the next big report. To your comment about exports and sales and inspections, on the exports sales side, we saw a slightly bullish, excuse me, like when we look at the inspections, that's what I should have said, not the sales, the inspections, a slightly bullish note to the week to start the week. That's what kind of popped that corn contract, that nearby corn contract up a little bit on Monday. Because we saw actually some relatively healthy corn export numbers for this time of the year, 48.9 million bushels. That was up both from last week and a 4-week rolling average. We saw our traditional markets of Mexico, Japan, Colombia, and Korea come into the market, and that certainly provided some help. On the soybean side, soybean shipments of 35.8 million bushels continue to trend lower. That continues to be a sour note in the soybean complex. Just we're not shipping as many soybeans now that the Brazilian crop is being harvested, and we're also not seeing hardly any soybean sales. Export sales of 2.1 million bushels last week was basically nothing. So I hate to say nothing because it was 2.1 million bushels, but
Relatively low.
yeah, relatively low. So that was in comparison, to make my point, that was down from 13 million bushels the week prior. And again, that was also below all trade expectations substantially of 11 to 30 million bushels, kind of in that expectations category.
Yeah. Well, Ben, one of the conversations I've seen starting around Twitter just a little bit is, in the past few years, looking at some of these elevated prices we saw, and this is a very small part of the market, very small, but, some people might have torn out some fence posts and tried to convert some grass ground and grazing ground into row crop production ground. And again, I want to emphasize how small of a portion that is. But you see some of these things where the conversation between capturing the opportunity before it's too late. Well, we've seen that swing back in the favor of maybe livestock production and cattle producers now, to where you have lower inputs from their standpoint, maybe when it comes to feed costs. So while this picture doesn't look great for row crop guys, it is like holistically looking at the U.S. agricultural picture, there are still ways to try and capture value.
Well, there's no joke that lower corn costs, lower feed prices for cattle producers. We here at Missouri feel like it'll be a pretty good year for cow calf producers. That's more, Scott and their weekly livestock market outlook. But a
As
pretty
a
good
shameless
year.
plug, check out the
Yeah.
weekly livestock market
Yep.
update.
There you go. Yeah, yeah, yeah. I'll remind our listeners here, it's expensive to buy replacement heifers right now. That's a hurdle. The second thing is you're right. We have transitioned some land from pasture to row crops. It's going to be hard to take that back to pasture. And part of that is profitability measures. Yes, you can make money right now running cattle, but it's a cycle. It'd take a year to get it back into, grass and stuff like that. So it's just field work, whether that's crops or whether that's pasture, is just it's a slow change. And so when we get these signals like what we're getting right now, it's going to take multiple years of signals like this to justify change, if any.
Yeah, exactly. It's one of those things where if you try and chase those trends, you're always going to be lagging too far behind them to actually
Right.
capture
Yeah.
any value.
Yeah.
So, well, Ben, as we look forward, you mentioned the end of March being a key point that could be a market shifting time there. But looking short term to the next week, what should farmers and ranchers be paying attention to?
Yeah, so this Friday, March 1st, is the turn of the month. And so we get not only grain crushings reports that look at kind of ethanol crush margin, numbers and stuff like that, but we also get fats and oils reports. That's for that soybean crushing component. And then all of our other reports for the week.
All right. Well, Ben, it's always a pleasure having your knowledge and information on the program. Viewers, listeners, if you'd like to learn more about us or the our sister program that we talked about just a little bit ago, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.